Hello, welcome back to Fintech Live London. We've got some more content for you from day two, and I'm joined now by Richard Crook from BCB Group. Richard, thank you very much indeed for joining me.
No, great to join you, and what a lovely backdrop. It's an incredible view here.
Absolutely, it's spectacular what we've got behind us. Canary Wharf in its full glory. So you've just come fresh off stage, of course. How was it?
It was good. It was good. Great crowd. Great event. Thank you very much.
So you were talking a lot about crypto. Obviously, it's a massive thing within the industry now. I think it's kind of hard to deny, really, isn't it, that crypto's had a tumultuous few months and few years. What do you make of sort of the level of confidence that there still is in crypto, and the fluctuations in its value and its price, and does that still matter?
I think confidence and price are always very heavily tied, and yes, Bitcoin has always been, and we always go back to the price of Bitcoin. Bitcoin is always a good test of confidence. And yes, you're right. There's been some tumult, as always, in Bitcoin and in the crypto industry or DeFi space at large. We are on a regular roller coaster as we continue to grow and build and mature. And that is merely part and parcel of the journey that we're on. We will see it, and we are seeing it, bottom out. That gives you a new confidence level. Previously, the confidence level fell to $3,000 a Bitcoin back in early 2019. That was a new confidence level. We're now finding a new confidence level around 20,000. And as an index, I've used it over the years, certainly over the last decade, to actually show where we're going to be at and where's the next leap point from.
Let's talk about BCB. What services does BCB offer in the crypto space?
So BCB is on a mission to bank the crypto industry. We provide financial services. We're a regulated entity. And though growing out of the UK, you've seen us recently being part of our Series A last year, reach out and start to acquire Sutor, a German bank. And with that, gives us a much greater stretch. But our clients come to us through the door on a regular basis, and we continue to add clients looking for business accounts to provide their clients crypto services where they need us to provide the fiat legs and the payment capability, and that's what our clients mostly do. This year we released our first yield product, and again that's widening the breadth of our product set and allowing our clients to actually use us for holding assets under management.
One of the biggest talking points, of course, around crypto is always regulation. What's your sort of stance on regulation? Do you expect to see, additional regulation as we move into the next 10 years? And do you think that can assist the crypto space?
So I think mostly we have to look at this from the perspective of regulation is good. I wouldn't say that unnecessary regulation is good, but you and I both actually need safety, want safety, demand safety, and that safety comes from regulation, from mature actors like BCB taking the regulatory cloak and making sure that we meet the regulatory obligations that we have. What we're seeing in the crypto industry is the recognition that the rule book is changing slowly, but the days of trying to duck, dive, weave, avoid regulation are over. And actually, those actors in the crypto space, like BCB, are very comfortable with regulation and are in many jurisdictions now not only meeting those regulations, but also engaged with the regulators to enhance those regulations to meet and beat the requirements that crypto needs.
One of the things, of course, when it comes to, you mentioned safety nets for consumers, is this issue around sort of educating and informing. I think it's around 1/3 of retail investors in crypto report themselves not really understanding enough about what it is they're buying into. How important do you think that it is to increase the information and the education that we give to consumers about the use cases for crypto and about what crypto really is?
I would go the other way around. Back in 2008, we had a tsunami of regulation come through. One of those bits of regulation was to lock out private or retail investors from anything but the very basic, simple products. Current accounts, savings accounts, public equity, public debt in some cases. Actually, you're not able to find yourself able to access a huge swathe of alternative assets that the private equity or the sophisticated investor can get hold of. And you're right, there is a balance then to be had between education and making sure that the investor that is accepting or wanting to engage in an alternative asset group like crypto is capable of holding it. But we shouldn't in any way get to a situation where we believe that they can't be educated or they shouldn't be educated and we lock them out. And that's the current situation. We've locked out those retail investors because we don't believe that they can be educated. And what crypto is doing very successfully is allowing access to those investments. And that then drives the conversation and the question you asked, which is, don't we need to educate? The answer is absolutely. We need to educate without locking out.
Why is DeFi so appealing, do you think, in a broader sense?
I think what we've seen over the last 30 years is the dematerialization of securities, public securities, and those have been put inside exchanges, giving them liquidity, giving them a market, and that dematerialization of public securities is pretty much done. There's a much larger securities asset class of private securities, be it the debt or the equity of companies. And actually, what DeFi is doing is starting to tokenize that much larger asset base. And so instead of dematerializing it into databases in central exchanges, which then come with price and fiction, actually what DeFi is doing is tokenizing that much larger asset base of private securities, debt and equity. We are testing it with private currencies right now, but over the next 10, maybe 20 years, what we'll see is the tokenization of that private securities market into tokens, and that will bring all the benefits that we currently see on the public market into that private market.
We've got some of the world's biggest companies towering behind us, of course, and I do feel like sometimes we get obsessed about financial centers like London. But what do you think that DeFi crypto can do for emerging markets?
Well, I don't think of London as an emerging market. I know there's been some commentary on that, but certainly what we have seen is a huge centralization over 50, 60 years into these big hubs, be it Hong Kong, be it London, be it New York. Each of those centers have seen over time that actually their center or their gravity isn't God-given, it isn't a right, and it is easily lost, be it the bond market in the 90s in New York, the FX market in the UK during the 2000s, or Hong Kong, as it's suddenly realizing that a lot of that market activity is now draining out to Singapore because of the activity of the regulator. So I think what you will see, back to your question on emerging markets, is that actually the opportunity DeFi gives them is an ability to leapfrog. Just as Africa didn't roll out landlines, it jumped into mobile phones. I think you'll find some of these emerging markets will jump straight over the top into DeFi and use the DeFi markets to gain liquidity and raise capital and foreign investment into their markets.
I'm sure we all look forward to seeing that happen over the course of the next few years. How are you finding Fintech Live London so far?
So Fintech Live has been cracking. It's always a good event. This year, it's nice to see us over here in the Docklands. The magazine is a cracking location. I think you have seen some good speakers on stage, and it's been some great contact. Thank you.
Well, we're full swing into day 2 now, and we've got some more interviews to bring you, so stay tuned for that. But for now, from me and from Richard, thank you very much, Richard.
Good.
Goodbye.